good evening, everybody. Yeah, y'all caught me right in the middle of taking some McDonald's out my check register, checkbook register, should I say. Y'all come on in while I finish this up. Voila. Good evening to everyone on Algo's internet. If this is your first time tuning in to, wait a minute, oh, that's too much. The light is touching that. The light is touching that. The light is touching that. Let's move the light so it ain't touching that and making that look all weird. And making that look all weird. Okay, now, good evening, good evening, good evening. If this is your first time tuning into Tim's Tidbits, I'd like to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome and give you a nice hearty well thank you for always tuning in to Tim's Tidbits with me, Timothy L. Rogers Sr., my homeboy back over here over my shoulder. He goes by the name of Spidey, and my sweetie back over there in the corner. Now, y'all know I just recently revamped the studio setup. I finished that up. For anyone who was on the live with me today, finished that up. Got it now so that my AC can blow into the area with me and keep me cool and refreshified. Now, with that unnecessary information out of the way, let's go see who in the chat. Oh, yeah. I would like to welcome you to, that's not the overnight price action. I'm sorry. Welcome you to the price action recap. Man, y'all already know it don't take much to entertain me, man. It don't take much to entertain me. So, hey, let's go see who in the chat, man. Let's go see who in the chat. We got here to learn and share in the chat. Notification gang, Rhonda Green in the chat. Hey, let me find this picture. I went back and I looked up, right? I went back and I looked up the conversation between me and the person that I've been calling Trinisha all this time, right? I wish I was on my Mac. Now I know where I get Trinisha from. I jacked it up. Right? I wish I was on my Mac so I can airdrop it. I'll save it to my Dropbox. God dog it. Okay. I jacked it up, but in my defense, she said, I just tell people, right? It's short. Hold on. It's short. I tell people to call me Taryn, right? I tell people to call me Taryn. It's the first 5 letters of my name. I have a real long, difficult name to pronounce unless you grew up with me. So here is my real name, right? And she spelled it out. That's the official that is difficult to pronounce because the correct pronunciation is, you ready, Tim? Right? And it says Trinita. It says Trinita. That's how I say it. Right? That's how I say it. And so the Trinita, it morphed into Trinicia, because if you look at, if in my defense, let me go to my Dropbox. Right? It said it had the spelling, right? And the official spelling had an IA at the end. It was a TIA at the end. And where I'm from, you either say Shia or Tia, right? And so when I saw the Trinita, and I just been saying Trinicia all this time, so I jollipies. And Rob said, "You still wrong." So I'm just gonna say, and then on top of that, right? How in the world you gonna get Terran, TEREN, out of TERN? Trinita, the correct pronunciation is, you ready, Tim? Trinita, TRENITA, Trinita. TRE, NITA, Trinita. Just because they call you Terran, don't make a whole lot of people call me Timmy, but my name ain't Timmy. My name is Timothy. Now that we just separate the wheat from the tail, I know all. And you know what? The moochers in the man, my nose dry. The moochers, they done figured out I be trying to wait them out, and they stick around. They stick around lurking. They stick around lurking. Hey, I want to thank y'all again for I don't know if y'all showed up, because I said I was gonna go crazy on the live, or if y'all showed up to see my handsome young son's smiling face. But I think we had got all the way up to 80 people on the live yesterday for the birthday, for the Banjo Bobby-a-thon. It was 8. I was like, man, we never had 80 people strong on here, except for when I had a special guest. That's the only time we got up that many numbers. We was up in the numbers yesterday. I said, I need to invite Banjo Bobby on here more often. How was y'all day today, man? How was y'all day? Did anybody tap into the live that I did today? I went live today at when you look at the real spelling, it's difficult. Look here. From now, you just Trinicia from now on. That's it. That's it. Who tapped into the live? If you tapped into the live today, put a 1 in the chat. Put a 1 in the chat if you was on the live today with the tape reading and working. That live. If you were on the live, did I call it tape reading and working? Oh, look at I burnt that rabbit. The only animal that doesn't flee from fire, it just went to sleep when the forest was burning. Hold it phone. Oh, that's one of them. That's one of them videos when you got a bunch of junk in there. It'd be like a bunch of, you got to wait forever to find what you want. It was called Tape Reading and Working in the Studio. Tape reading and working in the studio. Sorry, missed the live session. I didn't get a notification. Finding Superman. Make sure you turn on the bell. Go to the bell, Click on the bell and tell it to show you all. Rhonda was on there. Hit, Learn, and Share was on there. Kim just watched it. Kim just watched it again. Hey, Kim, we speak typo. You ain't got to retype it because it'd be a little error in there. We don't mind. We do not judge you for misspelling words and having crazy stuff in the chat. You see, y'all went crazy on 550 views. 559 views on Timothy thing yesterday. Like I said, I don't know if y'all pulled up because I said I was gonna go crazy on the live, or if y'all pulled up just to support Water. Oh yeah, the banjo Bobby-a-thon is over. So if you go back and watch that video, don't be trying to send no cash apps. That's over. All of that's over. So don't try to send no cash apps now. It was just only for the time during the banjo Bobby-a-thon. You saw a little bit, baby, just a little bit. So the reason why I brought that up is because I wanted to say, if you were on the live today, and if you were on the banjo Bobby-a-thon, wait a minute. So you're telling me 1, 2, 2 people were on there and 1 person just watched it out of the 33 people that we got on here right now? And it say 100, where is it? It say 100 people watched it and only 3 out of the 100 are here now? That math ain't mathing to me. That math ain't mathing to me. Hey, but anyway, what I was going to say, if you were on the banjo Bobby-a-thon yesterday, if you were on the live stream this morning, you, even though we are in some high resistance liquidity runs, you were able to see price perform exactly as expected. Exactly as price performed exactly as expected, right? So for anybody who missed banjo Bobby-a-thon, I was there live. Okay, then Regina was there. Regina, did you get an opportunity? Okay, for the people who was there on banjo Bobby-a-thon and on the live today, right? Did you get an opportunity to see the price move within the dealing range and go to the PD arrays that we anticipated them to go to based off of everything that we talked about on the banjo Bobby-a-thon and put it to effect today? Did you see it come together? Right? Rhonda said, yes, I followed along with the price action and saw it before it hit the targets. Y'all clap it up for Rhonda. Y'all clap it up for Rhonda. Rhonda said, all I need is 1. That's it. All I need is 1. Yes, sir. Yes, sir. This right here is why I get on Al Gore's internet every day and walk through the price section and try to share it, celebrate, and try to share it the way I understand it, because all you got to do is do it. If anybody wasn't privy to what was it? Let me see when it was, right? I'm gonna sum it up for you real quick. The secret to trading that no one will admit. I went live Yes, this day right here. The secret to trading that nobody will admit. All you got to do is do it. When you do it, it will start to make sense. It'll start to click. It'll start, because you can get on here and listen to me every day. You can go to ICT channel and listen to him every day. You can read every book you want to read, but until you execute, that's what holds the majority of us back, the lack of execution. Until you execute, you would never know what kind of trader you are, right? And like in that live, when I was telling you, I said, when I was looking at prop firms, everybody, if you ever heard me talk about looking at prop firms, I was all about, I need me a static drawdown. I don't want no trailing drawdown, until I started trading with prop firms. I didn't understand that the static drawdown didn't fit my trading personality. I was just going off what my friend said, and it made sense when she said it. But when I started doing it for myself, I'm like, oh, me no likey. Me likey this over here, right? King, thank you. You far too kind. Can you show an example of how you would use this strategy to swing trade? Hey, find the Superman, come here. Come here. Come to the front of the class. Come here. I already did. Yep. Price is fractal. So everything that I already said for going from the daily to the hourly to the 15-minute to the 5-minute to the 1-minute, whatever time frame you're going to use your swing trading entry for, you're going to start from a higher time frame than that, right? To get your bias. Once you rate the liquidity that's needed to be rated to go toward your destination, you're going to start looking for your setup. Once your setup forms, you're going to make your entry off of whatever your time frame is. It's the exact same thing. We overthink it. We tend to overthink it because we like, oh, he's doing that on the monthly. Hey, find the Superman. Get on my screen. We be like, hey, he's doing that on the monthly chart. That can't work for me. I'm a scalper. Never. It's the same thing. Price is fractal. Oh, he's scalping 5 points. I can't do that. I'm a swing trader. Never. Price is fractal. The only difference is the lower the time frame, the more times it's going to happen. The higher time frame, the less it's going to happen. You notice how I start. So on the weekly chart, price moves like this. Low, high, low, high. That's how I move on the weekly. On the 1 minute, low, high, low, high, low, high. It's doing the same thing. Low, high, low, high. It's just doing it at a faster rate of speed. So what does that mean? If you're making 1 minute entries, First of all, you got to be super correct on the direction, or you're going to get immediately. On the higher time frame, you got to have a bigger amount of risk that you're willing to take, right? And it's going to take you longer before you get slapped beside your head. Because on a high time frame, it can look like it's coming. No. Then go the other way. Because it's more fractals on the lower time frame that the algo has to go take care of. So while price, like you think of price going up and down like this right here, you think of it going up, like going up, coming down, going up, coming down. Now, let me go full screen on this so y'all can see this right here. Right? So you think I'm gonna draw. I'm gonna draw. I'm gonna draw. I'm gonna draw. Oh, 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 oh. Draw. Oh, 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 oh. Give me my. Let's go to daily charts. Let's go to daily charts. Matter of fact, I really ain't got to draw, but I'm going to draw anyway. I'm going to draw anyway. I'm going to draw anyway. Okay, so, right. Now, give me a screenshot of this. No, I still had stuff on there. I never deleted that other stuff. I remember that's from when last time I drew. Okay, so, right, looking at this right here, right, price here, we came down, we went up. Oh, I missed one. Let's start from this one. Came down, we went up, we came down, we went up, came down, right? So from that point to that point, let's do it like this right here. We're going to make this, we're going to make this the start, and we're going to make this the finish, right? So these are daily candles, right? So now, inside this area here where price came down, went up, came down, went up, came down, right? Now, it looked like price just, you know what I'm saying? Like here you can see, oh, it didn't just go straight down, right? It didn't just go straight down. It went down, it went up. It went down, it went up. It went down, right? Now, these daily candles, right? So, swap this to, wait a minute. I'm looking at the February 2nd high and the March 13th low. Go to weekly. Right? So on the weekly, give me a snapshot. Snapshot. So February 2nd high would be in this calendar right here. Oh, and make sure I get the right calendar now. There you go, right there. Nope, right here. I got to make sure I get the right thing now. What I said, February 2nd. What did I say? February 2nd. Oh, February 2nd, February 2nd, 2023 to March 13th. So that's going to be, come over here, January 30th through there, right here. That piece right there that I screenshot that. I don't know if I screenshot it. No, I didn't. Let me screenshot the right piece. Okay. Now, here, uh-oh. All right. I know who wrote that. Why just a second ago. Come here, mouse. Where's my freaking mouse at? Here it is. Can't even get back that far. There you go. Close enough right there. Okay. Now, might help if I took a screenshot, don't it? Might help if I took a screenshot, don't it? Down, consolidate, down, up, consolidate, up, down, up. I'm getting tired. I'm starting to draw sloppy. Now, the higher the time frame go up, now, the higher the time frame go up, the less up and down you see. Wow. Okay. So on the weekly, it's just price just went down, right? Looking at the weekly, price just went down, right? Looking at the daily for that same time frame, price went down, price went up, price went down, price went up, price went down, right? Looking at the hourly for that same time frame, price went down, kind of consolidated down, dropped, popped back up, went down, teeter-totted down, consolidated a whole lot, dropped down, popped back up, consolidated some more, dropped down, popped back up, fell off a cliff, popped up a little bit, fell off a smaller cliff, came up, consolidated some, went down, started crawling back up, consolidated some, popped up, dropped it like it was hot again, went up, came back down, jumped over a hill, dropped off a cliff, climbed back out the hole, dropped off another cliff, climbed back out the hole a little bit, dropped off a little molehill, consolidated to the downside, shimmy, shimmy, cocoa pop, died off, and then consolidated for a couple of days and died at the end. Right? So, over the same span of time, right, depending on what time frame you're looking at and how you're trying to enter, right, on the weekly, somebody might say, hey, all we've been doing is dropping in this time frame right here. All the market been doing is dropping because it just looked like one straight line down, right? Somebody on the daily might be like, oh, we done had a lot of give and take. We've been primarily to the downside, but it's been a lot of give and take, up and down, up and down. Somebody looking at the hourly chart be like, man, it's been a wild ride. We've been all over the place, right? So Tim, why are you saying all that? Because there's no such thing as, hey, can you show me how to do this exact thing for this over here? There's no such thing as that. There's no such thing as going back to the question that Finding Superman X. Can you show an example of how you will use this strategy to swing trade? I've already shown it for me, but I can't show it for you because I don't know your risk tolerance. I don't know your swing trading style. I don't know your preferred entry time frame. I don't know the PD array you choose to enter on. I don't know if you even use ICT concepts. I don't know anything about your trading model. So I can't give you that strategy the way you want to hear it because I already gave it to you the way I use it. Because I said I used the exact same in the live yesterday and many days before. Y'all already heard me say I used this exact same thing for day trading, for swing trading, for options trading, for no matter long-term invest, no matter what it is. I use the exact same thing for all types of trading. Now, for anybody that just want to carbon copy, right? If Lil Timmy Rogers was going to take a swing trade, right? Now we're going to go back and cherry pick something so that I can show you exactly how I would do it. If I was going to swing trade, right? If I was going to swing trade, looking for a swing trade entry, right? All right. These are weekly candles, right? These are weekly candles right here. Price came down, right? Took out sell side, right? Price came down, took out sell side, right? Closed below the sell side, right? Pushed back up, right? Price pushed back up. Didn't get a break in market structure. Came back down, right? Took out sell side again, right? Came back down, took out sell side again, right here, right? Closed below the sell side. Price pushed back up. Disrespected this fair value gap right here. Fair value gap was disrespected. If you don't understand what I mean by fair value gap was disrespected, go back and look at the other videos, right? Price came up, took out buy side. Right? Price came up, took out buy side. These weekly candles. These weekly candles, right? So look at the time we covering now, right? So we started out over here on March 28th, 2022, right? Price came down, took out buy sell side, pushed up, didn't get a break in market structure, came down, took out sell side again, right? Pushed back up, disrespected the SIBI, right? Pushed up, took out buy side, right? So now we've taken sell side once, twice, then we've come up and we've had a break in market structure to the upside right here. Breaking market structure to the upside. Now, the buy side is there now. And now this right here is no longer buy side, but it's now the breaking market structure. Make these big so you can see it. Make everything big so you can see it. Okay, so breaking market structure right there. Come up, right? After we break market structure, we come above these previous highs, get into this fair value gap, and we get rejection. Boom, rejection right there. Now, looking at this, now we've taken buy side, right? We've taken buy side here, right? We've come up here and we've gotten rejection. There's our rejection right there, right? As we approach the destination, right? As we come to the destination, now coming up to the destination right here, we're coming up to the destination and look at the dollar. The dollar is consolidating. What is that? Divergence. The ES is coming up. Boom. Took out the high right there. The dollar is nowhere near that low and is just consolidating as the ES is coming up. That's divergence. So we've reached the destination. We got divergence on the dollar. Now we're just waiting for our it to play out the way we want to. Here is rejection right there. We took out this weekly high. We took out that weekly buy side after taking the buy side we were looking at. We took out this weekly buy side and we rejected, right? We took the buy side, we rejected. Now, the draw is where? The low that started this run. Now, this is the draw right here. Boom. That's the draw on liquidity. That's the breaking market structure to the upside. That's the rejection. The rejection, now the draw is there. That's the draw. That's not the entry. That's the draw, right? So we come down. We're coming down. Now that we're dropping here, right? We got the rejection, right? Now, our bias is bearish now, right? Our bias is bearish. Starting the next week, we open up and we dumping. We don't know we're going to dump the whole week, but we open up and we're dumping. Right here, if it floats your boat, you can start to watch the lower time frame, which would be the daily, to look for your entry. Or if you say, hey, that's too much watching for me, you can just watch it from the weekly. So we're going to watch it from the weekly first. I put that there so I know where to go for the daily, right? We coming down, right? We got a fair value gap right there. We push back up into the fair value gap right there. You can be like, hey, I'm going when we come back to this fair value gap. Boom. excuse me, boom, price touched the fair value gap right there. It poked up above it just a little bit. See the little, I don't know if you can see the wick, but push up above it. You say, hey, institutional order flow entry drill there. The next week, it came all the way up into here, however you want to get into it. But again, your risk going to be up there, right? So boom, that's looking at it on the weekly. Right now, here's your the leg that started that. Boom, your low-hanging fruit. Your next destination. That's the bottom of the run that started that high where it rejected right there. Right? So that's showing it off the weekly. And if you got it on an institutional order flow entry drill, for easy math, we're just going to use the high of this candle. You would have got it at 4163.50. 4163.50 would have been your entry. Your low-hanging fruit would have been 3809 even. And then your final destination would have been 3172. I mean 3724.25, right? So whatever that work out to be in options, it is what it is, right? Or if you swing trading the minis or whatever, the ES itself, what we said it was 3163.50. I mean 4163.50 minus in the low. Let's go. We're gonna go all the way down to the low, right? Well, we'll just do this. Low hanging fruit, 3809. 354.5 points for low hanging fruit. And final destination, 3724.25. 439.25 points for entering at consequent encroachment. I mean at institutional order flow entry drill. You would have taken heat up to let me see, 43.50 43.50 minus 41.63.50 41.63.50. You would have took 80 points of heat. You would have took 80 points of heat for a ultimate destination of 439 points, 439.25 points. 80 points of heat for 439 points, and that's all based off the weekly time frame, not using any other time frame but the weekly, with the exact same fair value gap technique that I was saying. Now, mind you, on the weekly, stuff looks a little bit different. You know what I'm saying? It like if you want to wait until you get like the full, once you know what I'm saying, if you wait until you get like the full breaker can combine with the fair value gap, the entry won't be until down here. The entry is down there, and you get far less risk to reward. It's more risk against you than reward if you're waiting for the full breaker and all that, because it take a lot of time for the weekly candles to move and form, right? So you would have to tweak it on the that's why you got to understand the concepts, right? So now we're going to go back to 80 points of heat for 400, and you're risking, let's figure out the risk. Somebody write this down. 80 points of heat for 439 points, and your stop 44.12.75. 44.12.75 minus 41.63.50. 249 points, 249.25 points for a stop loss. So you're risking 200. So you're risking, we're just gonna say you're risking 250 points to get 440 points. You're risking 250 to get 440, right? 440 divided by 250, right? A 1.76. So 1 3/4 R, right? You look, you 1 3/4 R, right? So you're risking 250. You're risking I did that wrong. I hit divided by. No, that's right. 250 times 1.76. Yeah, I did that right. Yeah, so it's 1.76 R, right? So now, and that's, I ain't even gonna worry about the other one. Now, right here, after we get to open up and we start dropping, you say you want to drop to the daily and look for your entry, because this right here is giving you what you want on the weekly. You got the divergence, you got the rejection, you got the bearish sentiment based off of the close of this week getting rejected after taking out that high right there, right? So now you go to the daily there. Now let's find our vertical line right there. Boom. Now that you got the rejection, now here on the daily, right? On the daily is where you can really see like it start to form out a little bit better, right? So here on the daily, you got you have the rejection, right? We still don't have. Now Risky Roger can come in here. We're not gonna talk about Risky Roger. Risky Roger can come in here, right? Risky Roger can come in there, but this would require going down into like a 4-hour time frame to get this entry and not be Risky Roger, right? It and not be Risky Roger. You would have to drop down to 4 hour. Why? Because when you come down here, you still ain't getting. I mean, technically, you got a break right here. You got a daily break in market structure right there, technically, right? Technically, so you know what I'm saying. But you still have to drop down. Now we're going into the full gamut of everything, right? Now, so you come here, we come down, we got our break right there, right? We got our break in market structure right here, right? So let's move our break in market structure here. We taking out that low and taking out that low, right? So this is our break in market structure here. Boom, right? Break in market structure there. Now we got this low that came up, took out that high, break through it. Now we got our breaker right there. Right, we got our breaker right there. Now that we came down and took that out, we got our breaker right there. Still ain't doing that. We still chilling, right? We got our fair value gap right here. Right. So breaker 19 right there. Fair value gap, right? Matter of fact, this breaker has a higher body in the consolidation area right there. That breaker got a higher body. So we're going to use that breaker, that candle right there. See, this candle here has a higher body than that candle right there. So we're using that one right there, right? So we got our breaker there. We got our fair value gap there. We got a order block here. We got a lot of confluence, right? We got a lot of confluence there. So now we're coming back to, right? We got our fair value gap. We got our breaker. We got an order block. So now we're coming back here and we're just going with consequent encroachment of the fair value gap, right? Consequent encroachment of the fair value gap right there. So 41.7275 is the entry. 41.7275 is the entry. And now on this daily time frame, we don't have to risk all the way up there. The risk is here now, because on the daily time frame, we see that this right here is a potential balanced price range. What lets us know that, right? We got opposing fair value gaps, right? We just took out buy side liquidity and we got heavy distribution coming out of that area, and then we left it. I mean, we got heavy distribution, and then when we tap back into that area, we left it. Boom. Potential balance price range. Price comes back up, right? Into the breaker, into the order block, into the fair value gap. That's your entry at 41.72.75. Your stop loss is here on the daily at 43.50. I mean 43.02.50. 43.02.50 minus 41.72.75. You got 130 points of risk entering on the daily, right? You got 130 points of risk entering on the daily. And then what was the low that we said? Is it right here? 37.24. 37.24.25. Is that what we said? 37.24.25. 43.02.50 minus 37.24.25. 575 points. Did I do that right? Did I do that right? Yes. 575 points. So you risk 130 entering on the daily. You risk 130 entering on the daily, and you gain 575 entering on the daily. Smaller amount of risk, more reward. Using the same using the drop down to a lower time frame technique. That's how I do it. When I get my bias from the higher time frame, I drop down and look for my entry one time frame down, and there's the run on liquidity, the pang out to the downside, the breaker, the fair value gap, the retrace back to the breaker and the fair value gap, and the entry. You're very welcome. So that's how I would use it for a swing trade, right? That's how I would use it for a swing trade. Again, I can't answer for how you would use it. I can't answer for if you was using a different entry model. I couldn't answer for anything else, but it's just all about like yeah, exactly. I used to overthink it too. And like I said, it ain't no shot at nobody. I just try to keep it real. I used to overthink it too. Like I'd be like, hey, you're thinking too deep. Don't think about that part of it. Only focus on what we talking about right now, because there's a lot of moving parts to the ICT concepts, and we tend to try to just use every screwdriver, Phillip tip, flat tip, hole punch, chisel, hacksaw, skill saw, jigsaw. We try to pull out every tool for every single thing, right? Just like today. If anybody was on the live today, right? I appreciate you, Father. Finding Superman for asking that question. That gave us opportunity to really like deep dive and look at some stuff. I appreciate you for asking that question. And I don't want anybody to take offense when I answer the questions the way I answer them. I answer stuff the way I need to hear it, and my skin pretty thick. Except when it comes to my wife. She can hurt my feelings easy. But somebody block. Somebody block Larry. Hey, what was I saying, man? Oh, if you was on the live today, right? If you was on the live today, is this the? Let me see if this is it. Yes, this is it, right? if you were on the live today, as you know, when I first got on the live, right? It's this right here, 10 o'clock. Let's go down to 5 minutes. I can't remember what time I got on the live. Do y'all remember what time I got on the live? It was almost 10:30. It was almost 10:30. I remember. So, all right, it was almost 10:30 because I set the time for 10:30 and then I went live beforehand. So the chart looked pretty much like this when I got on the live, right? If you're a channel member, I sent out a picture. I said, hey, I'm not going to do the 9 o'clock live, but here's my current chart, right? I said, here's my current chart. And this is what the picture looked like right here, right? I said, here's my current chart, right? So this is my chart. Now, right, the draw is up here, right? The draw is here and there, right? This is the low-hanging fruit. This is there. Why is the draw there, right? Why is the draw here at this previous day's high? Can somebody put in the chat why the draw is the previous day's high, right? Somebody put in the chat why the draw is the previous day's high based off of what's on the screen right here, right? Based off what's on the screen right here. And don't mind that you can't see past this wick over here. You got enough information based off of what's on the screen right here, right? Why is the draw the previous day's high right now? Mind you, I didn't say that the draw was up there when I shared it. I just said this is my current chart. But based off of what I got marked up, right, with this bullish breaker, these fair value gaps, yes, Avery, we took sell side and we rejected off of it, right? We took sell side and we rejected off of it. I give you 60% on that, right? It should be 50% because it's only half of the answer, but I'm gonna give you 60%. Because don't be trying to come in here after I done said the answer, Lil Hulk. Don't be trying to come in after I said the answer, right? So between Avery and Lil Hulk, we took sell side and we rejected off the sell side, right? So here we come on, Avery, get off my screen now, right? So here we came down, price came down from over here. We know that because it's a previous day's high, and we're coming from over here, right? You can't see it in the chart, but we got that line there letting us know that just above this high right here, over here to the left somewhere, is the previous day's high. So we came down from the previous day's high, right? So this high over here somewhere brought us down to this low right here, and that low took out a low over here. How do we know it took out a low? Because it says previous day's low. How do we know that we came from a high? Because it said previous day's high. So this high, right, brought us down here, and we took out this low over here, and then we rejected off of it, right? Boom, came up, rejected off of it, came down, right, hit this fair value gap right there, and took off again, right? So now I'm looking at this breaker. This breaker right here, this bullish breaker. I want price to come back down to this bullish breaker to attack this buy side low-hanging fruit, attack this buy side full target, right? Now, this is what the chart looked like when I sent it out. When I jumped on the live at around 10:30, this is what the chart looks like, right? I've been on here over an hour. I'm sorry, y'all. I jollipies. I'm going to try to wrap this up. Looking at what we did was not presented with an opportunity to participate in exactly what I wanted to happen. Price hit the sell side, rejected off of it, and kept going without me. Never came back to where I wanted it to come to to enter for a long trade, right? And then I know some people might say, hey, Tim, it gave you a pullback right there. I'm glad you said that, right? Because if you notice, right, we took off here, left this area there, and I mentioned this on the live too. So since we took off there, leaving that area, now we know the algo more than likely is looking at this right here as a balanced price range, and it will not come back there until after it goes and handle some kind of business, right? Namely, taking out some buy side, filling in an imbalance, doing something, right? Doing something. Right? Now, we're looking at coming from here to there. Now we're looking at this piece of the price leg right there. Because if that's now, if this is a balanced price range and we consolidate there and we take off, right? So now all of this right here is potentially a balanced price range right now. So you say, hey, Tim, there's your pullback right there. You're correct. It did pull back, but look where it pulled back to, right? Look where it pulled back to. Bullish fair value gap 5 minute. Right there. Did that give me a fair value gap entry right there? No, it did not. Pull back. Now here, it gave a fair value gap entry right there. It gave a fair value gap entry right there, right? But guess where I was not? I was not here at 9:30. I was not here at 9:30. And I was not here at this time. Even if I was, that didn't give me what I want, right? So I did not get an opportunity to partake in the market doing exactly what I wanted it to do, right? Then, while we were on the live, right, I said, I want us to, now that we've taken this buy side, I said, I would love to see us poke back above this high one more time and then come break market structure, right? Because that'll be 3 times above the high, right? And then once we went lower to the 1 minute, we saw that we did get 3 pokes above after taking out the buy side liquidity. Then we came down and broke market structure right there because we was looking for us to take out that low right here, right? Wanted that low to be taken out and then retrace back into an area right here because we ended up saying we want to go short on the 1034 SIBI, right? The 1034 SIBI, which was right here. We want to go short on that SIBI right there, right? And then after price had moved so far, we said, okay, price has gone too far. Now this, from this green line here all the way up, now all of that is the balanced price range. Right? Now all of this is the balanced price range over to there. Now we got our breaker over here. We got our breaker there. And we got a SIBI at the 1036 candle. Right? So now this is where we want to go short at. The 1036 candle. Right? Consequent encroachment on the 1036 candle. Let's see what that is. We're just going to use this low right here. Right? 41.5750. We can check it, but we're just going to eyeball it at 41.5750. Right? 41.5750 even. Right? Consequent encroachment 41.5750. That low right there. 1036 for the short entry right there. Now, what did price do? Price just kept going without us. We said we was going to enter short there, target this low right here, and that low right there. Those were our targets right there. This low here at 9:30, and this low here from 8:38. And I think we was targeting was it the London low? I can't remember which one. I know we was targeting something down here, right? I think we was targeting something down here in the new week opening gap, because we talked about it may come to the new week opening gap and bounce. So yeah, right here around, I think was targeting that. Now, what did price do? Left without me. Did not give me an entry. So that's once, twice. So once, twice, 2 times. The market did exactly what was spelled out, exactly what was called for, exactly what we wanted it to do, and was not given an opportunity to participate up, was not given an opportunity to participate down, right? But when it comes to trading, if you can't keep a cool head after missing entries like this, walk away. Leave it alone, because if you find yourself wanting to revenge trade, walk away. Just like I was the other day when I went live when I was at McDonald's. I was like, look, I missed it. When I get home, I ain't even looking at the charts because I could feel myself being upset. So today, I was anticipating missing the moves because I was going to be running around taking care of business. So when I saw that the move got missed, it didn't upset me. And I can come in here with a clear head, right? A clear head. And when I remember when we was looking at it, I said, oh, the NQ playing catch up. The NQ just now coming to run out these lows from yesterday. So if the NQ attack this low and rejects, I like going long off of this breaker again. If the NQ comes down and takes out this low and rejects, the NQ, because the ES right here, for anybody who don't know what I'm talking about, right? The ES had already taken the low, right? If I just stretch it over there to like, you know what I'm saying? The ES had already, let me get on the right low. Okay. Now, the ES had already taken the low. When we get around, let's get around. Yes. So we're just going to put it on. We're going to put it on this 11 o'clock candle right there, because that's around the time we would, matter of fact, we're going to put it on this 12 o'clock candle right there, because that's around 10 something, 11 o'clock, we was looking at it, right? So the ES had already taken out the low, right? The Dow, right, had already taken out the low, right? And then the NQ, when we come to that same 12 o'clock candle, the NQ was just now taking out the low. It was just approaching it. It hadn't taken it yet. So that's when I was like, oh, the NQ playing catch up. So if the NQ takes out this low and rejects, right, that's going to put the draw on the NQ back up here. And the Dow and the ES is already stronger. So now, like ICTV talking about the sixth sister, right? Now the sixth sister, if it comes down here and rejects off this low, now it's going to try to play catch up. So if this starts to try to play catch up, I like going long off this breaker again, right? So I just patiently waited until we got down here, right? And y'all already know how risky Roger do. On the 1 minute, we got a break in market structure on the 1 minute. So I entered on this 1 minute fair value gap right here, right? I entered on that 1 minute fair value gap. Why? Because I'm trusting this breaker, because the NQ has hit and it's starting to reject, right? So yeah, I took a little heat. I had some divergence. I checked the divergence. I had divergence on the dollar over here, right? I took a little heat, came down within my risk tolerance. No harm, no foul. But notice we came down, poked below that breaker, and then We came back up. Here, right there, if I would have waited for this move right here, right, I wouldn't have been able to get in on my breaker like I wanted to. And I would have missed the move again. Not saying you should be risky, Roger, because it don't always happen like this. But this was within my risk parameter, and it worked out. That's why we have stops, right? Now, had an opportunity to participate. Took it. I didn't try to go all the way back up. I took my standard, you know what I'm saying, how I shave out, right? Now, remember when we talked about we want to go short on that 1036 Sibby, right? Scroll over to right there at 2:03 p.m. The high of that 2:03 candle, 41.5750. The high of that 2:05 candle, 41.5750. 2 times came to the tick. Don't take any heat for your 5.25 point move, right? Where you want to take it back to in an instance like this chop suey, I wouldn't take it. I wouldn't try to take it no farther than this new week opening gap right here, which I didn't, right? Where did it come to? Down into the new week opening gap, into the break-in market structure, and then it went back up. The exact same one that we wanted. It came back, gave an opportunity right around lunch, came back, gave an opportunity to short right around 2 o'clock. This one yielded much more than 5.25. This one right here yielded a little about 7 points maybe. What's the low on this candle right here? 41.5025. So like 6 points. Like 6 points. 5.25 was met. I could care less if it went 5.5 or 50.5. Got them 5.25. Got it. So I said all that to say, if price does not give you an opportunity to get in, even though you pretty much could see the move before it happened, don't fret. Don't get upset. The market always gives another opportunity. Will it give another opportunity that same day? Can't guarantee that. You can't force your will on the market. Just stay disciplined, stay focused, and stick to your setup. Is this the best setup in the world? No, it's not. This is the best setup for me. This is the best setup for me. Do anybody got anything else before I call it? It's always another bus coming. You feel me? There's always another bus coming. Right? Oh, and this right here, this is what I shared in God dog, I hate when it do that. I just made everything collapse. This is what I shared in the Discord, what we just talked about. Say, hey, everybody, I set a limit order in my Apex account inside the bullish breaker we discussed on the pop-up live, and came back around 12:45-ish and found that it had held up. I took 3 off at 5.25, 1 off at 6.25, and left 1 for the top of the new week opening gap. I meant to share this back then, but because I shared that at 2:10. And then, as you see right here on the picture, I still had 1 contract left on, and the last one was right up there at the top of the new week opening gap. And 3 came off at 5.25, 1 came off at 6.25, and then I had the stop loss locking in 4.25. And the reason why I had it locking in 4.25 was because it was below a fair value gap over here. Yeah, it was below that fair value gap right there. And that's the one I was talking about when I took it off of the breaker. I took it off. That was the trade I was talking about when I took it off of the breaker. If I can get the right thing up, this breaker right here. When I took it off the breaker over here. And as you see on the picture, the entry was at 41.43. Right there. The entry was at 41.43. And it's my standard 5 contract setup in my Apex account right there. 5 contract setup right there. You're very welcome. Thank you. You far too kind. Thank you, here, Learn Chef. I set the limit order at around 5:30 and got 5 handles around 12:30 in my paper trading account. That's what's up, Kim. Congratulations. Congratulations. Just doing it. When you're doing it and you seeing it happen over and over and over, it just starts to come second nature to you. The butterflies start to go away. Like the butterfly sitting there and like be like, oh, is it gonna work? Is it gonna work? It starts to go away. Even if you see yourself let me share this right here. Remember the other day? I don't know if y'all remember, but the other day when we was talking about the fair value gaps and like when we want to see it respect the primary function of the PD array and all of that right there. You were in my bag. You were in your bag yesterday, Tim. MJ with the I appreciate that. You far too kind. Yeah. Can't wait for second. Oh, it's coming. All you gotta do is keep doing it. All you got like Connie, let me ask you a question. Right? If you sat there and thought hard as you can, I guarantee you cannot remember learning how to walk. Right now, through the grace of God, we all get up off our chairs and just walk away without even giving second thought to it. We walk and text, we walk and chew gum at the same time, we walk and yell at our kids, we walk and carry stuff, we walk with our eyes closed, we walk around the house in the dark. You cannot remember learning how to walk because walking just comes second nature because you've done it so much, right? It's a lot of things about driving a car. Driving an automobile is extremely dangerous. But we all drive cars every day without giving it a second thought because we've done it so much that it's like second nature. But driving a car is very dangerous, right? It's a lot of things that we do every day that we don't even think about. Getting dressed. I bet you can't remember learning how to button up a shirt. It's some adults that still can't button up shirts because their shirt be crooked. It's like, but the more, and I can say this with all confidence, the more you do it, like the butterflies are going to subside. The more you do it, it's going to become second nature. You're going to be like, it's like you're going to be able to see it so clear that it's going to be scary. It's going to start to scare you when you first start being able to see it so clear. You're going to be like that little kid that I be talking about when a little kid first learns something. They be like, and they look around to see if other people learned the same thing they learned. Like, did y'all see me learn that? You're going to be like, I can see it. I can see it. And the more you do it, it's just going to be second nature. Trust me. Like, if it wasn't so, I wouldn't tell you. If it wasn't so, I wouldn't tell you. To quote the great carpenter in the sky, if it wasn't so, I wouldn't tell you. But yeah. So you can start to, like, when you realize, hey, I'm on the wrong side of the trade. What I do when I realize I'm on the wrong side of the trade, right? If the trade give me an opportunity to get out of the trade with one tick, I'm gone at that one tick. I don't care if I end up being on the right side. But if it's showing me I'm on the wrong side, instead of risking that full 5, give me the one tick. I get another trade another day, right? But if it don't let me get back, like, for example here, right? Let's just say right here on, boom. Let's just say right here, for whatever reason, right? For whatever reason, I thought this sell side right here under, let's say I thought this sell side, right, was the destination for whatever reason. I know it looks stupid right now, but let's just say I thought that was the destination, right? Right. And then we come up and I say, hey, we got a break in market structure right there, right? And then we pull back and I go right here. I go long on this fair value gap right there. Right? I go long on that fair value gap right there. I know it look crazy right now, but we just, we just pretend. Right? I go long right there. Let's stretch this out some so y'all can see it. Right? So now, boom. I went long right here. Now, I'm seeing we got that fair value gap right there. Right? We got that fair value gap right there. And I went long on this fair value gap right here going to the upside. Let me change this to red like it's supposed to be. Right? So I went long here and my stop loss is right there now. Right? My stop is right here. That's what my stop is. Right? My stop right there. Now, we got a bearish fair value gap above us, and I went long right here. Right now, if I want to know that I'm on the right side of the trade, I need a closure above this fair value gap and stay above it to give me a clue that I'm on the wrong side of the trade. A closure below this fair value gap and staying below it says, hey, Tim, you're on the wrong side of the trade. Let me come over here where I entered the trade, right? Right, boom. So I got into the trade here, right? I'm sweating a little bit because I'm like, man, I done dropped down all the way down in there, right? Let's go down to the 1 minute here. We're gonna set a line there, and then we're gonna go to the 1 minute. Because this 15 minutes, but we're gonna go to the 1 minute. We'll just go to the 5 minute. We'll go to the 5 minute. I could have did it on the 15 minute, but hopefully it give me a lot more movement. It give me a lot more movement on the 5 minute than the 15 minute. If I want a lot of movement, I probably should have went all the way down to the 1 minute. Yeah, let's do that. So I can see, hopefully I can get a lot of movement and it makes sense with what I'm trying to show. Where's that line? Where they? Oh, there. I see stop. Okay, yeah, there you go. Okay. All right now. Okay, so come down. This one I got into the trade right there. Boom. Got into the trade there. Here. We took out the buy side. Say I'm using this mitigation block right here. I'm using that mitigation block in accordance with this fair value gap, right? Looking all the way over something over here, whatever, right? So now I need a closure above this and stay above it. A closure below this and staying below it is bad juju, right? So now start moving over, right? Kind of sweating a little bit. We took some heat. Now we're pushing back up, right? Sweating a little bit, still sweating, right? At this point right here, right? See how we coming down here and we steady staying down there, and we've been in the trade for 1, 2, 3, 4, 5, 6, 7, 8, a long time. So we got in the trade at 8:46 p.m. Bad idea. And then now it's almost an hour later, and we're closing below the fair value gap that we got in on, right? Now, continuing over. I'm gone. I'm out of the trade over here. I'm gone. Why? Because the market gave me an opportunity to get back green. I'm gone. I'm out of the trade. Where am I out of the trade at? Probably at this high right here, because once it got back green, I moved my stop up to lock in one tick right there. I moved my stop from here, wherever I got in at. Let's just say I got in right there, right at consequent encroachment. Once I got back green, I put my stop right here, right? We went all the way up to the top of that fair value gap. I put my stop up there. I'm locking in profit like 90 going north, right? Let's keep moving over, right? Right. We went back up again. I ain't moved it. I ain't moved my stop no more because we hit the top of that. I ain't got nowhere to move it to, right? I'm stopped out. Right there, right? I ain't worried about it because you know why? Because when we came down over here, we closed under that fair value gap once, closed under it twice, closed under it 3 times with like a deadly looking move, right? We're steadily closing below these fair value gaps right here, right? It's like we're using this as an inversion fair value gap or whatever. This bullish fair value gap is now acting as resistance, keeping price down. It's respecting this bearish fair value gap. I'm trying to go long. It need to be disrespecting the bearish and respecting the bullish, right? So, boom, I done locked in a little bit of profit. If you don't want to lock in a little bit of profit, once it took back off there, you could have brought your stop to here to save a little bit of risk, like shake, instead of taking 5 points of heat or whatever it was down here. Now you only taking, what's that, like one point of heat. You only taking 1 point of heat. Me, I'm gone once it get green. Now you can use it to manage your stops. And you take off. I don't care nothing about this right here going up. Why? Because I locked in my profit there. Because I'm on the wrong side of the trade. Right? We come up to this volume imbalance there. I mean that liquidity void, right? And then we reverse for a little while. Then went back up. It's dilly-dallying. It's just dilly-dallying now. We went up, we went down, we went up, went down. But that's how I use it to manage. Hey, I'm on the wrong. And then we actually dropped right there. Came back up and then dropped again. Right? So boom. All on the wrong side of the trade. Trying to go long there. I realized over here I was on the wrong side of the trade. Or you could have stayed in all the time and got stopped out over here at 1:25 a.m. getting stopped out for a loss when I got stopped out for a small profit because I realized early I'm on the wrong side of the trade. And even here, once you realize you was on the wrong side of the trade here, that right there could have brought you down and you've been like, hey, let me get out for some kind of profit because I went into some profit. Then I let it come back against me. Now I'm going to take what profit I can. Or you could just be stubborn and just get stopped out. Anyway, that's an hour and a half. I've been on here for far too long. I appreciate y'all for hanging out with me. I ain't got no water back here. I ain't got my fan on. The AC probably up on like 76 or 75 because it's hot in the house right now. Do anybody got anything before I call it? Do anybody got anything before I call it? Any questions? Any feedback? You're welcome, Rhonda. Do anybody got any questions before I call it? Ooh, I should have been turned that fan on. That fan feels so good. You're welcome, Michelle. You're welcome, Connie. Do anybody got any questions? I'll give it a few seconds. Chris, you're welcome. Christopher. Timothy. You're welcome. Taryn. Chris, what are you doing, son? What? Son, go get me a bottle of water. Sitting up there yelling. Appreciate that, E-Rock. Hey, look, ain't nobody got nothing, so we're gonna go ahead and call it, man. Y'all already know what time it is. Y'all know what I got to say every single night. Take advantage of the day while you can. Don't put off till tomorrow what you can say today. If your loved ones are still with us, if your parents are still with us, please contact them now. Immediately. Let them know that you love them. Don't just say it, don't just show it. Say it, show it, and confirm it. Open up the lines of communication so that you know how to express your love for them. And they'll know how to express their love for you. Ain't nothing. One of the worst things in the world is doing everything you can to show somebody that you love them and they're not receiving that love because you ain't speaking in their love language. Right? That's one of the worst things in the world. You know what I'm saying? Oh, that fan got my what's the name going crazy. So, like I said, don't put off till tomorrow what you can say today, man. Call up your parents, call your kids, your grown kids. Go in the other room, hug your spouse, hug your kids, tell them you love them, man. Do not put off till tomorrow what you can say today, because one day tomorrow ain't gonna come. Trust me, tomorrow's not gonna come one day. Been there, done that. Ain't nothing you can do about it when that tomorrow don't come. I appreciate y'all for always hanging out with me, man. I hope I was able to share something today that somebody got something out of. If I wasn't able to, hey, I'm gonna try again tomorrow. Speaking of tomorrow, I will see y'all tomorrow at 9 o'clock Eastern Standard Time for the overnight price action. I'll see y'all later, man. I'm gone.